Doris. I'm here to share with you about my stock account update. Today, my stock account has earned $850. U.S. stocks fell 1.1% market focused on debt talks. So, in my account today, I've earned $710, including the post-market price. Right now, the net asset of my account is $74,079.4. Today, United Natural Gas made a loss of 1.71% to $6.88, and the SQQ made a gain of 30.83% to $26.27. The market generally closed lower. Dow Jones Industrial Average closed down 0.69%. Nasdaq Composite closed down 1.26%. And S&P 500 closed down 1.12%. The industries that closed the lowest included medical, which closed down 3.13%, credit services closed down 2.16%, and the other tech industries, which closed down close to 2%. Today, oil and gas rose for 1.51%. U.S. debt ceiling talks with the Congress seem little progress. House Speaker John McCarthy said there is still hope for progress. Investors continue to closely monitor the debt ceiling talks in Washington as the Fed's default deadline approaches. House Speaker John McCarthy said on Tuesday that there is still hope of progress in the talks. U.S. Republican debt ceiling negotiator George Graves said on Tuesday, "I don't think the debt ceiling talks are going well. Under the White House understands the spending crisis will not move forward." McHenry, chairman of the House Financial Services Committee, said the White House thinks they can still spend more next year. McCarthy and Biden met at the White House on Monday night for an hour-long debt ceiling negotiation. While both sides called the talks productive and professional, a deal to avoid a catastrophic U.S. default is still difficult to reach. Treasury Secretary Janet Yellen have warned that the government could default as early as June 1st if a deal to raise the debt ceiling. In a statement after Monday's meeting, Mr. Biden said, We reiterated that the default issue is not within the table, and that the only way moving forward is to reach a bipartisan agreement in good faith. He recalled the meeting productive. McCarthy said, "The president and I know the deadline, so I think we talk about until we finish this work." McCarthy said the two teams will get back together and work all night to reach a compromise. Yields on Treasury bonds, the most risk at default, jumped little progress in the ceiling talks. The yield on the 1-month Treasury note rose about as high as 5.888% in light trading, after raising 25 basis points to 5.865%, Refinitiv data showed. Goldman Sachs analyst said Yellen was more certain in her latest letter that a highly likely would trigger a default early June rather than a possible, as she said in the previous letter. Goldman analyst also said Yellen did not talk in the letter about the Treasury's ability to pay the bills and how many weeks or days it will support after early June. She had already this first letter to Congress. MRB Partners partner, global strategist Philip Kohler said, "Of course, the debt ceiling has been putting pressure on investors. The deal could be reached at the latest minute, but if it comes down earlier, I think it'll be encouraging." Fabiana Fedeli, Chief Investment Officer of M&G plc, said, "I think the possibility of a default is slim, because I don't think either Democrats or Republicans want to default. But we may be closer to default and the deadline, and the closer the deadline, the more nervous clients will be." He said, investors may turn to safer havens, perhaps long-term Treasury bonds. Markets are also watching for the Fed's monetary policy outlook. Minneapolis Fed President Kashkari said overnight it was a close call. Decision to vote to raise interest rates again or pause next month's meeting. St. Louis Fed President James Bullard said another 50 basis point rate hike may be needed. According to CME Fed Watch Tool, money market expect a 25 basis point chance of another rate hike next month, about 26%, compared with the 20% chance a week ago. Expectations of a rate cut later this year have also weakened, with rates expected to maintain around 4.7% through December. On Tuesday's economic data front, the Philadelphia Fed's non-manufacturing index improved slightly in May. The figure rose to -16 from -22.8 in April, but remained in negative territory for the third straight month. The Richmond Fed manufacturing index was -15 in May, -8 expected, and -10 last. The Richmond Fed Services Revenue Index for May was -10. And -23 last. Total new home sales in April were estimated at an annualized 683,000, compared with 665,000 expected and 683,000 last month. New home sales in April annualized 4.1 versus -2.6% expected and 9.6% last. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.